Hey traders, welcome back to the weekly Forex Forecast. Last week we saw stocks in the US starting to sell off, the S&P, the Nasdaq, and as they reversed, the big thing from last week was the rally in the VIX. And as we start to see volatility picking up in the US stock market, so too we started to see flows into risk-off currencies last week. And it looks like this is going to continue coming into this week. As you can see, the dollar is still kind of neutral. However, we're bouncing off the lows. And with volatility increasing, with stocks selling off in the US, this is bringing kind of flight safety risk off flows into the US dollar. And I do think dollar long plays heading into next week, as we're going to see when we look at the quantitative scores, are going to be a good opportunity for the first time in a long time. And alongside that, I also think Japanese yen longs are going to be back on the table next week, and we're going to look at those as well. Okay, so moving on to the market selection process, looking at the quantitative data in the HedgeDash platform, and you can see that the pound is still sitting strong at the top spot. Now, the pound in and of itself is not a safe haven currency. The US dollar, the Japanese yen, the Swiss franc, these are really the safe haven currencies. But the pound is still holding up, and to the long side, this is something we can look at next week. However, because I favor risk-off setups working next week, based on what we've just discussed, with rising volatility in the stock market, looks like that's going to continue next week. If those flows come into the US dollar, the Japanese yen, and also the Swiss franc primarily, we will see, in terms of risk off next week, the pound outperforming some of the commodity currencies. So we'll be looking at the pound pairs, but I'm going to be looking at the pound versus the New Zealand dollar in today's video. We're going to look at pound CAD. And also, although it's my least favorite short, we will look at pound Aussie. Now, it does have an absolute score of 46, but you can see the direction of travel here. The Swiss franc is going this way and the Australian dollar is coming this way. It's reversing. It's actually weakening in the performance metrics and heading most likely towards the negative side. And if we do get this switch next week and the Swiss franc pops higher and the Aussie dollar falls lower, we're actually going to get a pooling of the commodity currencies, the Aussie, the CAD, and the New Zealand at the bottom, as we start to see the franc, the yen, and the dollar moving into the positive side. This is classic risk off data, and it's another reason why going into next week I primarily favor shorts in the commodity currencies, so New Zealand first, Canadian dollar second, and the Australian dollar third, versus primarily we'll look at the pound because it is still sitting at the top spot, but also versus the US dollar, the Japanese yen. For the first time, many of you who watch these videos every single week know we've been off the yen. We haven't been looking at yen shorts because of the risk of a Ministry of Finance intervention. However, we're now in a position where the Japanese yen is neutral, getting stronger, and this actually sets up the ability to be long the Japanese yen heading into this week, especially versus commodity currencies, which is classic risk-off setups. And at the same time, we've got the Ministry of Finance wind in our sails. So, if there's any intervention, we could be on the right side of it as opposed to being on the wrong side of it. And so to summarize then, we're also going to be looking at New Zealand dollar to the downside, US dollar CAD to the upside. And remember, US dollar CAD is correlated to the VIX. So as the VIX moves higher, we should see US dollar CAD breaking out as well. And we're also going to be looking at some of the franc pairs. So we will look at New Zealand franc and we'll also look at Aussie franc. So primarily those commodity currencies short versus the more safe haven assets, but also the pound heading into next week. That's what we're going to be focused on in today's video. And that's what I'm going to be personally looking at trading throughout the week next week. Okay, so kicking off the watch list with crude oil, and next week I can only be short or do nothing. I'm not looking to be a buyer of crude oil. You can see technically in the 4 hours, we're kind of making our way up. We start to flag and then we start to fail. We really start to get momentum to the downside. And so what I'm going to be looking for next week is I'm going to be looking for a pullback, preferably into the 82.20. And this would be a great place next week. I'm going to be looking for a 1 or 2 day reversal to the downside. If we blast through here for whatever reason and we take out the 84.75, this is the second place I'd be looking for a 1 or 2 day reversal. Now, very often when it does this, when we push through the first upper bound, we saw this with markets like Aussie-franc last week, looking at the first bound, it pushes through, tests the second one. Very often when it does that, the first thing that means is you're getting abnormal momentum, and actually very often this precedes reversals. But the second thing is, sometimes I will be in here for a short, it will push through, test this, and I use this second upper bound to cost average my initial position. And this is what I do every week with members, and cancel that initial position on the pullback for usually a break even or a scratch. Now, sometimes it pushes a bit higher and you end up taking a loss, but that is generally speaking what I'm doing each week. And the reason for that is because once we test the upper bound, you have roughly a 7 out of 10 chance of reversing. And if you test the second upper or lower bound, you have roughly a 9 out of 10 chance of reversing. So essentially, when the odds increase above this level for a potential reversal, it gives a good opportunity to either cost average, or if you're not already short, it gives a good opportunity for an initial position. So those are the main two things I'll be looking for next week. You can also look for intra-week breakouts. So as we start to pull back, if we have a strong market to the downside and we fail to test the first upper bound, we just start to break down with momentum. You can look for that 4-hour bull flag or bear flag. Very often you get one in the asset in the 4 hours within a week. So those are the opportunities we're going to be looking at going into next week, and all of these setups is what I'm going to be looking at as we go through today's video in all of these assets. So the first Forex pair we're going to look at is Pound New Zealand. Now, as always, I have a directional bias, in this case to the upside. I usually take one directional bias off the table each week. And in this case, I can either be long or do nothing. I cannot look for short opportunities in this market next week. So what I want to see is we're already starting to consolidate. We kind of tested the high. I'd like to see this pull back, form this kind of almost rectangle type consolidation. And if we start to breach the 2.1321, this is going to be an area I'm going to be looking to buy the dip for a 1 or 2 day reversal to the upside in Pound New Zealand. If we breach this for whatever reason and we sell off all the way down to the 2.1149, this is the second place I'd be looking for potential buy opportunity next week. Whether I'm involved with a long opportunity or not, this is the second place I'd be looking for potential bounce. And finally, of course, if we do start to consolidate and you fail to get this test at the first lower bound, sometimes it just pulls back towards it. And then you've got a strong market and you get this kind of momentum, especially if you get a catalyst. You can look for that bull flag setup into the 2.1663. Next is Pound CAD. Now, the first thing to note is with the CAD pairs that we look at in today's video, we do have an interest rate decision coming out of Canada next week. So I'm only going to be looking for opportunities in the CAD pairs after the interest rate decision, because usually in the build up or the lead up to interest rate decisions, those pairs with that currency, and in this case, Canadian interest rate decision, therefore the Canadian dollar, those pairs tend to do nothing. They just kind of chop around, do nothing. And then they start to move on the interest rate decision. So it makes trading them pre-interest rate decision kind of pointless. So I'm going to be waiting for the interest rate decision, and then really I'm going to look at one of three things. So if we just consolidate and we get a bearish reaction from the Canadian dollar, in other words, the Canadian dollar sells off post interest rate decision, you can look for that bull flag setup where you get the momentum break. You tend to see the market correct, consolidate, and then you get a follow through into the 1.7854. If it's a neutral reaction from the CAD, in other words, it's kind of a nothing interest rate decision. Maybe they cut rates, it's expected, and we don't really see too much going on. I would be looking for this to come down, test the lower bound, and this would be the opportunity below the 1.76057 next week. And you also have the previous high here. So there's a nice stair step here. Pull back, test this level, and also the prior high. This would be a great place for a 1 or 2 day rally to the upside. And the final thing is, if we get the Canadian dollar coming out and it's stronger, let's say they're expected to cut rates and for whatever reason they don't, and we see the pound really sell off against the Canadian dollar and take out the 1.7481, this is a great place to look to fade that interest rate decision to the upside as well for 1 or 2 days. So those are the setups I'm going to be looking for post interest rate decision next week in the CAD pairs. And the final pound pair is Pound Aussie. Again, I can either be a buyer or do nothing. Selling this market, looking for short opportunities is not an option. And these levels, we're quite zoomed in here, and sometimes people think these levels are too big for the week or they're too small for the week. These levels are calibrated based on the market pricing for the week. So these levels are for the week, and then next week they will change. And usually I like to be in and out of trades within the week and then look for fresh opportunities the following week. So any pullback in this market, I'm going to be looking for a breach of the 1.91520, and this is going to be a great place, especially if we break through here and say we test this high. It's going to be a great place below here to start to look for a 1 or 2 day reversal, drop down to the lower time frames, look for that momentum to fade and look for those reversal patterns. If we break all the way through here for whatever reason, although I don't expect it, if we do, this is going to be the second place, whether I'm involved here with a long or not, this is going to be the second place I'm going to look for a 1 or 2 day reversal. And the final thing is, if we have a very strong market and we fail to even pull all the way back to the first low bound, we just flag or consolidate and break out with momentum, you can look for that pullback. People like to use Fibonacci, this kind of thing with this, but it's really just a bull flag setup into the 1.9484. Okay, moving on to the dollar pairs, starting with New Zealand dollar to the downside, because the New Zealand dollar, as in the currency in and of itself, New Zealand dollar, is my top short heading into next week based on the quantitative data. You can see we're actually trending to the downside, nicely making lower lows and lower highs. So any pullback in this market next week and a breach of the 0.60810 is going to be a great place to look. So we breach this and test this high even for a 1 or 2 day reversal to the downside in New Zealand dollar. If we blast through here, again, I don't expect this to be the case, but you know, it's always good to have a backup plan. If we do, for whatever reason, blast through here, some unexpected news comes out, and we test the 0.6152 and this high, this is the second place I'd be looking for a short next week, whether I'm involved with one here or not. And finally, as always, you can look for that kind of flag consolidation, and then very often in the 4 hours, you get one sell-off, pull back, and you get that kind of follow through bear flag in this case into the 0.5939. Now, it doesn't mean every week you will get a bear flag. It doesn't mean every week you will get a test of the upper bound here or the second upper bound. But by having these all ready to go, having these setups pre-prepared, when they do happen, we can reactively jump on them. And that's really the point of what we're doing in today's video, is planning and preparing for the opportunities that do arise next week in these pairs. Next is US dollar CAD. Now I want to show you this on the daily chart first, because look at this tight consolidation as we've had very restricted volatility in the US. The VIX has been tight, the VIX has been low, and as we've had reduced volatility, look at US dollar CAD coiling. Now we're getting the breakout in the VIX. Remember, the VIX is correlated to US dollar CAD, so we should, as we continue higher in the VIX, which looks very likely, we should start to see US dollar CAD breaking out to the upside. I am only looking for long opportunities for that reason heading into next week and because of the quantitative data. So if we drop down to the 4 hour chart, what I'd really like to see is I'd like to see this market pull back, breach the 1.36430. This would be the area I'd be looking to buy this market on the dip for a 1 or 2 day reversal. Now, some of these, you get involved, you can hold these for longer periods of time. And I think next week, we could actually see the beginning of some fundamental moves in the yen pairs, for example, US dollar CAD. You know, if you pull back and test the 1.36, it may actually continue like we looked at on a much bigger breakout over the next couple of months. But just in terms of short-term trading, I would be looking at that 1 or 2 day reversal to the upside. If we break through here for whatever reason, the second place I'd be looking for potential buy opportunity is the 1.3554. And again, I might already be long, looking to cost average it, or if I'm not involved for whatever reason it tests this, this could be a good initial opportunity to the upside. And finally, as always, if we start to see the VIX breaking out and we don't get the pullback all the way here, you get that bull flag instead, you can look for that, however you want to trade it, Fibonacci or anything else, you can look for that bull flag setup into the upper bound at the 1.3818. And if you breach here, you really only have a 3 out of 10 chance of continuing with any real significance. So it makes a very good intra-week profit taking opportunity above this level. The next dollar pair is Aussie dollar. Now I can either be short or do nothing next week. And actually we've been looking for long positions in the Australian dollar for quite a while, and it's really outperformed to the upside. Last week, however, with that reversal in the VIX, with the sell-off in stocks, that kind of risk on we've kind of been looking at has come to an end. And as a result, we're seeing the Australian dollar start to underperform. Now, it is still better than the New Zealand dollar, which I prefer as a short, and the Canadian dollar, which we're likely going to get a rate cut next week and probably further downside in the CAD. But outside of those two, I am also still looking at Aussie dollar shorts as discussed in the portfolio selection part of this video earlier. So any pullback in this market, what I'll be looking for is a breach of the 0.6762. This is going to be a place I'm going to be looking for a 1 or 2 day reversal. If we break all the way through here and we test the 0.68390, this is the second place I'd be looking for a potential short opportunity next week, whether I'm involved with a short here or not. And the third thing you can look for is a fast market, in which case we don't pull back, we just get the breakout, and very often you get it with this kind of bear flag momentum, and then you can look for that sell-off into the 0.66087. The next US dollar pair we're going to look at is euro dollar. Now, both the euro and the dollar were quite close together in the quantitative scores as we saw earlier. And so I don't think this is as good a market as New Zealand dollar to the downside, US dollar CAD to the upside, even Aussie dollar to the downside. But on balance, based on what we're discussing with the VIX, breaking out, big move last week, if we get continued volatility, if we get stocks selling off in the US again, which looks likely, over the next few weeks, even the next couple of months, then we are going to see risk-off pressure in the Forex market as well. And for that reason, I do prefer shorts, even though these two are quite evenly matched in the scores this week. So any pullback in this market, if we breach the 1.09627 on balance, I would prefer to look for a potential short opportunity, although I do like the other dollar pairs better. If we blast through here for whatever reason, and as unexpected as it is, because most of the time you won't be testing these levels, but if you do, it means that, again, you've probably got a bigger piece of momentum and actually this should continue high the following week, or reverse if it's the other way. But if we do breach this just on an intra-week basis at the 1.1040, I would be looking for a potential second opportunity, whether I'm short or not, for 1 or 2 days to the downside. And as always, if you just get this breakout, you fail to pull back, breakout with momentum, you've got that bear flag set up into the prior low below the 1.08075 you can also look at in euro dollar next week. But I do not want to be looking for long opportunities in this market next week. Moving on to the yen pairs, and the yen pairs have been on the sidelines in these videos for quite a while because I did not want to go against the Ministry of Finance. But with a combination of this sell-off, which looks like to be part of an intervention, although it wasn't confirmed, and also volatility picking up in the stock market, which tends to see risk-off flows into the yen, so it's supportive of the yen. These things combined do make me want to start to look for yen long plays for the first time in a long time heading into next week. So any pullback in this market next week, if we breach the 95.87, I'm going to start to look for potential short opportunities. Maybe we push through and test this high, that kind of deep test into resistance, that would be good. Then I'm going to be looking for a 1 or 2 day reversal to the downside. Again, you might find actually this is a 1 wave, this is a 2 wave in this area somewhere, and the next move down is quite sharp. Could be heading into a 3rd wave because this is all 1 move down. But in terms of short-term trading, I'm looking for 1 or 2 days generally to the downside. If we push through here for whatever reason, test the 97.13, above here is the second place I'd be looking for a potential short position in New Zealand yen next week. And if we get a fast market, we get a strong market, and we can't even test the upper bound, we get that kind of bear flag sell-off, you can look for that move into the 93.36. Next is CAD yen. I can either be a seller or do nothing next week. I cannot look for buying opportunities. So what I'd like to see is if we get kind of just a neutral response from the Canadian interest rate decision, I would be looking for a breach of the 116.11. Again, only looking for CAD pairs after the Bank of Canada interest rate decision next week. I would be looking in a neutral kind of outcome where not much happens. I would be looking for a 1 or 2 day reversal from the upper bound. If we blast through here after the interest rate decision, because let's say they're expected to cut and they don't, and we see this blast all the way into the 117.53, right at this low as well, really nice pullback and retest of this low. This would be the second place, in an outcome here where we see a stronger CAD, where I would be interested in a potential 1 or 2 day reversal, so fading that move to the downside. And of course, if we get the rate cut as expected and maybe we get a really nice sell-off in the CAD, you can look for the pullback and the bear flag set up into the 113.28 and probably this prior low as well next week. Next is Aussie yen. Now, again, I can either be short or do nothing. Buying this is not an option. We've got the momentum to the downside, so I'm looking for a pullback. And these markets tested their second lower bounds last week. It's one of the reasons why we can see quantitatively we have abnormal momentum. It's suggesting, and I've said to you, this could be potentially a 1 wave. And above the 106.67 next week could actually be the top of a second wave. So what does that imply? Much bigger moves down, especially as that confirms the overall risk off that we've been looking at across data sets. So any pullback in this market next week is viewed as an opportunity to look for a short above the 106.67. I'm going to be looking for a 1 or 2 day reversal, potentially even, depending on how it sets up, holding this for a potential 3rd wave. If we blast through here for whatever reason, although I would be surprised, but if we do, and we breach the 108.06, it's the second place, whether I'm short or not, that I'd be looking for a 1 or 2 day reversal to the downside. And as always, if we break without testing the upper bound, you can look for those intra-week kind of bear flag or bull flag setups. The bear flag setup in this case into the 103.88. So Japanese yen back on the table next week. Okay, so wrapping up the Forex pairs with a couple of the franc pairs, and the Swiss franc has actually been a good short. We've been looking at shorts, and I've actually traded shorts quite a few times. But last week, with the increased volatility and stock selling off, we started to see that change. That short Swiss franc setup switched, and actually we're starting to see flows coming back into those safe haven currencies. So this is where we have that close and reverse mentality. You know, we're buying Aussie franc, let's say, we're buying Aussie franc. Then 1 week we get the volatility picking up, we get Aussie franc taking out its second lower bound. Maybe if we're already involved, we have to cost average and try and scratch that trade. But the following week, that's the indication, that abnormal momentum, that we're likely to get further downside. So coming into this week, any pullback in this asset is viewed as an opportunity to look for bearish setups. And if we breach the 0.5396, especially if we breach it and test this low, this is going to be a great place. I'm going to be looking for a 1 or 2 day reversal to the downside. To be honest, if we do pull back, we'll probably come down, take out the prior low. But 1 or 2 days to the downside is essentially what my plan is every single week, and that's what I'm looking to pull out the markets. But if we breach this and we come all the way up to 0.5450, this is the second place. Whether I'm short or not, I might already be short, looking to cost average and just risk manage this off the book. Or if I'm not short, this will be a great place for an initial 1 or 2 day reversal to the downside. And as always, if we have fast markets and we break out, with the bear flag kind of set up that momentum, you can look for the follow through into 0.52879. And below here is good intra-week profit taking opportunity for any shorts. Wrapping up the Forex pairs with Aussie franc. Now, a number of these, the yen pairs, the franc pairs, we had these kind of reversal weeks where we came down, tested the second lower bound. And so going into this week, that's that momentum to say, look, this is a real reversal. You know, we've been looking to the long side and Aussie has been outperforming, but we see the Australian dollar start to peak in the performance metrics in the scores. We see the quantitative data showing us that the volatility has picked up to a point where momentum is now pointing to the downside. So coming into this week, we want to reverse that. We want to be looking for any pullback above the 0.60019 as the opportunity to get short. And again, we could very well be looking at one wave here, a two wave, you know, above the 0.66019, and that insinuates a bigger breakout to the downside, which again fits in with a rise in VIX and heightened volatility. So something to keep an eye out for next week. But any pullback into the 0.60019 is going to be viewed as a good opportunity to look for shorts. If we blast through here, which I'd be very surprised about, but if we did, reactively, this would be the second place I'd be looking for a 1 or 2 day reversal to the downside. And of course, we may get a fast market where we just break out with momentum, and you can look for that bear flag setup into 0.58831. Wrapping up the video then with gold and silver as we always do. And I do favor, because of my bullish bias in the dollar and because of the risk of the VIX continuing higher, volatility coming in, and us seeing some liquidation in those commodities, I do favor shorts on balance in gold and silver. I don't think they're the best shorts next week. I do think there are other commodities, copper, oil, for example, palladium. I think all of these are actually better shorts and they're ranking as that in the quantitative data. But on balance, I would favor shorts because of my bullish bias on the dollar next week. Out of gold and silver, I prefer silver for shorts, but any pullback in gold next week, especially if we can breach the 2450 and maybe test the underside of this kind of consolidation, this is an area I would consider looking for a 1 or 2 day reversal in gold. If we break through here and we test the 249972, this is the second place I would consider a potential short for a 1 or 2 day reversal in gold. And if we break out without testing the upper bound, that's one of the ways you know you've got a fast market, you get that momentum. You can look for that bear flag setup into the prior lows over here and the 2351.30. And last but not least, we have silver. Again, on balance, I favor shorts. You can see this head and shoulders reversal pattern already breaking out with momentum in the 4-hour chart. So any pullback, especially if we breach the 30.29 and test the underside of this pattern, it's going to be a great place to look for a 1 or 2 day reversal to the downside. If we blast through here and we start to break above the 31.37, this would be the second place I'd be looking for a 1 or 2 day reversal to the downside. Whether I'm short or not, this would be the second place I'd look for a short opportunity. And if we start to break out intra-weeks, you get that kind of bear flag set up. You know, there's your prior high, there's your low, and you start to pull back and you start to break out intra-week. you can look for that bear flag setup into the 28.14. Again, because of the risks around volatility over the next few weeks, I do think we could see those flows coming into the dollar, and that is likely going to be suppressing the price of gold and silver in the near term. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com.